Whoops, where's the microphone? Hello, everybody. I have to move my microphone, so I might disconnect. Please don't disconnect me, computer gods. Hey, there we go. I think we're still connected. Hey, there's a fun start to your video, eh? Let's see. Just waiting for YouTube to kick in here. I think I've done this correctly, but I never know. Hey, there we go. I think we're still connected. So we are official. Good morning, everybody. Welcome back to the RationalInvestor.com's Daily Brief video offering. Where are we here? It is Tuesday, 26th of May. Kind of a ho-hum, not really that important of a day. Canadians, you better get your taxes filed. You don't have to pay your taxes till September, I'm hearing. But nonetheless, get it filed by Friday here, so the clock is ticking. But on balance, not really that significant of a day event-wise, other than good old Brian's going in for a major tooth I don't know. Hopefully, and it's cool. I'm gonna let you guys in on the whole soap opera because I've been avoiding this forever, and it's just so immature of me. If anything, it's fantastic. Oh, hello. Oh, boy. Here comes some crazy clowns. But Brian's going in for a root canal today. Luckily, fingers crossed. Worst case scenario, I have to have the tooth pulled. So there you go. That's maybe that sort of explains the start of this video. I'm slightly preoccupied today. Anyway. If anything, it's probably an excellent testament to if you are a professional trader and you have stuff going on in your life that might affect your trading decisions, your disposition, your mental state. Maybe just don't trade that day. Frankly speaking, I haven't even pulled up the broker platform today for myself. We have a whole bunch of names on the list. If stuff does go and does pop, then should rally up into my sell orders. And of course, if I get fills, then, obviously I'll log in just to confirm the fills. But I'm not thinking about putting anything new on right now because I am very preoccupied mentally. We can talk a little bit about sort of overview. What do we see going on in the world? Basic trends or maybe even lack of trends. Give you an overview of what I see sort of happening in the crypto space. But to all intents and purposes, in fact, actually, what I do like is the idea that we have our TRI-SOF secret options formula meeting coming up tonight, which is open to level 3ers who have moved beyond the options material and are sort of just getting their options conversation legs going. And of course, veterans and grads of the entire program. So we'll have a lively meeting tonight. Probably have some half-decent ideas come out on the backside of that. But my hunch is we're probably going to be hearing more about profit-taking on names that were picked up through the past month or two rather than any sort of new purchases. And I like that thinking right now. It feels like the junior market is going through very blow-off toppy kind of state. It is where are we here? The middle to the end of May. That's typically what happens through this month. Obviously, we've had massive curveballs with viruses and quote unquote, not quote unquote, but shutdowns of economies and now restarts. One might argue, this is the only business when stuff goes on sale, nobody wants to buy. Could you argue that the discounting of prices of these assets was nothing more than these assets all going on sale? Sure, it's not a bad, is the glass half empty, is the glass half full? If anything, I like the idea that we don't really have an opinion as to whether the stock market is going to go to new highs or the stock market is going to go to new lows. We just simply run our trading plans, and opinion And emotion really isn't a part of the conversation. We often, comment that if you can build plans, things like dollar cost averaging plans, then ironically enough, actually you want the market to crash because that means that future purchases are going to be less expensive. You have to, of course, have the fundamental understanding and idea that your asset is a rise-only market. I think, for people who are playing things like the stock market, ironically enough, if you could just buy something like the Dow Jones Industrial Average ETF, it is by definition a rise-only market because the politicians won't go through what they saw in the 1930s. They just won't let it happen. It's an accounting trick, right? I've shown you guys clearly, and maybe we should start the conversation off on that kind of note here this morning. Why is the stock market a rise-only market? Had some fun longer-term charts on here. I don't know whether these ones are going to show us, but all the level oneers are going through sort of the strategic planning part of their course material. Actually, that was last week. Holy steep hill. Okay, so you all understand this completely. All right, on to fundamental analysis. Let's learn about PE ratios. Oh, God. It's a steep learning curve for everyone. And I even learned recently that some of our more sort of advanced students that have gone deeply down things like WD GAN rabbit holes and have spent a lot of time and energy studying that have sort of maybe forgotten a little bit about, the stuff that was taught in level 1. And oh boy. So, by all means, even the alumni of the program, you are more than welcome at any given point in time. If you need to come back into the program and brush up on things like what's a price to book ratio, what's a PE ratio, why is it so important to have low share count stories to be interested in, you're more than welcome to come back in. Everyone, right? That was the whole reason why I sort of did the grandfather thing, because this is a shitload of information. And it's not a bad idea. It helps me immensely. And actually, that's one thing I don't like about not teaching the level 1 and now level 2, because Kieran's doing such a kick-ass job there, is when I did all of the levels in every single module, it forced me to come back and revisit these topics every single quarter. Now, it's just way too much workload for one human being, and I'm going to run out of gas here at some point. So, for actually, ironically enough, for the community's benefit, it's actually really good the direction that we're going, where we have just multiple layers of people that understand this material. Like, I love what I see happening in the level 1 program right now. Like, I was literally sort of kicked out of class for being a troublemaker. Which is great. That's perfect, right? Because it means that we have confidence in the instructors and the TAs running shotgun, that these people are, focused and really kicking ass and learning. So I thought that was awesome. Anyway, so let's take a look at the Dow Jones Industrial Average over the past 100 years. I mean, you can clearly see that this is a chart that's going from the lower left to the upper right. Now, is this really realistic? Is it really realistic for a market or an asset to continually just keep rising in price? And the answer simply is no. And if anything, this is a major problem for our society, because people don't realize that there's something else that's being sacrificed to make sure that this thing keeps going up. And here's our market state right now. We're rocking and rolling, and you're like, fear cycle, Brian, what are you talking about? We actually finished the cycle higher than where we started. And if anything, this is a beautiful Fakezi, because now all of that sort of fear cycle, demographic stuff, it goes right out the window. You don't know what you're talking about. It's bullshit, Brian. Stop listening to that guy. It's beautifully orchestrated what those people have done here. So, back in this world, way back when, the the notion of your currency being stable and solid was really, really important to the marketplace. And you can make an argument that there were huge battles in the 19th century over one particular sector of the economy that wanted to dominate this sort of money system. And the United States of America, to a certain degree, because it sort of came into fruition at the very end of the 18th century, and it was this brand new entity, and it actually had a lot of resources, especially after Jefferson's play on with Napoleon with the Louisiana Purchase. This entity actually had a lot of assets, especially like natural resources and just raw land. You could make an argument that the United States of America in itself, especially through years like that, and go watch the Money Masters video. Great analogy, right? Through the U.S. Civil War, and this is why it was so important to keep the Union together. It was clearly illustrated to Lincoln that you don't really have to worry about all these central bankers and stuff if you freeze them out and just simply say, look I'm going to issue hard currency that's issued by the U.S. Treasury that is backed by the tax receipts that people pay to the U.S. government every year. And that instantly freezes out the whole banking system and stuff. And of course, the banksters, they hate that because their whole premise is get the government to borrow money and then we will use that loan, right? Because it's backed by taxpayers paying their taxes. We will use that bond and we will print credit against the collateral of the bond, i.e. the fractional reserve lending system. And then the banksters can control the economy because they lend out and then they restrict the credit that they've done off of the bond. The bond never changes, just the supply of money expands and contracts based on the banksters' agendas. And if they feel like the market is weak and too many people have borrowed money, they'll just contract the money supply. And voila, instant recession. And this is the case with Lincoln, because after can't remember the president of the United States through the 1820s and 1830s. And it took him almost entire 2 terms. What the hell's his name? Really famous. Old Hickory, I think, is his nickname. Anyway, really famous U.S. president. Actually, a lot of people, when Trump was first elected, a lot of people actually tried to hearken back to this president. And we got some Americans in here. What the hell's the name of that president? Old Hickory, right? 1830s. I always forget his name for some reason. I have a mental block on it. Come on, you Americans. You all know your American history. Anyway, point of the matter here is that through the early to mid 19th century, this one gentleman went to great... now I'm going to get all the smart-ass answers, right? He went to... he went to great lengths to get the central banks out of the system. So, was it Jackson? It might have been Andrew Jackson. Yeah, that could be it. Old Hickory? Somebody Google Old Hickory. I think that might be who it is. Anyway, so the point here is that coming into the 19th century, thank you, awesome. Google says Jackson. All right, there you go. So coming into the 20th century, the United States currency, to all intents and purposes, was relatively pristine. It was actually worth something. And so much so that, of course, when Europe blew itself up in World War I, a lot of the European powers came to the United States to borrow against a relatively strong currency. And you actually had a material shift. The United States currency was unbastardized, if you will. The problem with that, of course, right, is that if a currency is unbastardized and is of value, then the natural growth and decline cycles of our, and everybody learns this in level 1. You can think of this cycle as the most beautiful and pristine example of the greed cycle. Remember, roaring 20s, and ironically enough, in comparison terms, I think we are sort of right about here right now in that. And I did a tweet out recently of what I think the late teens, early 20s, I think they're going to look like this. That's what we're going through right now with the whole virus crap. But greed cycle peak, and for whatever it's worth, I think this is exactly what we're heading into over the next 10 years. And of course, that's the last thing everyone in the world is expecting, right? So that makes perfect sense. What was so terrible is that the dot-com peak way over here, everybody in the public was expecting growth, 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 growth. Nortel Networks was 35% of the Canadian stock market right here, at this point right here, and it was all growth, growth, growth. By here, Nortel Networks was bankrupt, out of business, stock was worth 0. So this is what I'm worried about here for all these crazy gold bugs. Here, where's 1980? Here is exactly where Joe Granville said, end of capitalism, it's all over. Jimmy Carter was a total, I hate to use the word, but frankly speaking, it's perfect, impotent president. We used to call him lame duck. Couldn't do anything. And like I said, stock market people, end of the world, all that kind of stuff. And they couldn't have been more wrong. So what I'm worried about is, yes, this is a cycle pivot. We are going through it now, folks. I mean, does it look like this, where, the pivot's a little bit later? Does it look like this, where you don't even really see the pivot, but then years down the road, you go, oh, gee whiz, we're basically exactly where we started. We have a dilution of the currency going on right now. So, I mean, it's not even maybe just to actually show you what's going on in real time. Right? That's what we're going through right now. You can already start to see, it looks to me like this sort of midpoint of this trend line. I mean, gee whiz, look how much it was respected. Boom, 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 boom. Let's go back to my room. You know the story. So what a surprise. We basically, are playing off of that midpoint right now. I don't know whether we have to trade back down to the bottom of the channel right away. I don't think anybody, it's in your best interest to get into predicting exactly where markets could go. And, this is kind of like what's pissing Julian off right now. Sometimes these big stock indexes will just V-bottom, ving, and drive you crazy. Why didn't it put in a polite W like you said, Brian? That's just the market. The market's a bitch. I do find it interesting that this pullback here, actually, if we zoom in on that, you might argue that this pullback here was nothing more than just a revisit of the last major weekly W here. So that's interesting. And I do remember being on the site. The problem is that I know none of you. Let's see, were any of you here? Brian M., you've been around a while. This was probably a bit before your time, Josh. I'm not sure. Rob, you've been around a while, so maybe you've been here. Zach, you might have been a little bit before your time. But I remember distinctly, we had a guy on the site a while ago, a longtime member of the site, alumni, and from what I understand, he's off doing YouTube videos and stuff for himself, so totally awesome. I remember he and I used to do videos on a regular basis, and we got the biggest buy signal in the stock market. I remember this. It was March 2016. And you might argue that crypto, after its halving event, it really put in some pretty good-looking bottoms. But I remember we used to run the breadth signals off of old WordPress site. That was when we were still on the WordPress site, I think. And hopefully you can all see this W. And interesting, all we did here was we just came down and basically traded right back to the original double breakout level. See that? Oh, that's interesting, eh? That remarkable. All right, so hope you're having fun here today. Doing a little bit of macro analysis here for you. So, the issue originally what I wanted to talk to you guys about is why is this a rise-only market? And the answer is, of course, that this is what happens in natural cycles. Greed, fear. And this is what's supposed to happen to risk assets, equity assets. Equities are risk assets. There is no underlying intrinsic value to any of them. You have to understand that. So when the economy's growing, US dollar stable, Fed wasn't really involved too much in the market. And also, too, this is the worst part about this. Fed wasn't involved in the market. They got their mandate. Now, how do they take control? So it's almost like this is like a double-edged sword. You have classic generational growth in the economy, but of course, is that a natural growth rate? Does that look like a 45-degree angle? No. So what must this be? Well, this must be speculative excess. If the angle is greater than 45 degrees, 1 unit of price, 1 unit of time, then it's not a natural growth rate. That's i.e. speculation. So, the goddamn charts went parabolic, roaring 20s. Everybody borrowed money. Is that playing into the banksters' hands? Remember, they just got established in the United States of America. So how do they take control? Get the public into an excessive rah-rah bull insane. You're borrowing too much money. Why are you doing this? Pull the floor out from underneath the market through the very natural cycle. This is exactly what's supposed to happen. But these guys, they all just got screwed. And how ironic, right? You can actually see where technicians, and I even mentioned this in the lounge a couple times today. The good part about this, everybody, is that you don't have to be a victim anymore. You now should understand how to play the game. So when you look at a chart like this, you go, well, gee whiz, yeah, you're right. I got no business playing here. In fact, that Beamish guy says M's aren't too good, and when the market's smiling at you, maybe stay the fuck away. Down she goes. And lo and behold, look what comes in down here. Now, regardless of banksters, regardless of the bullshit, if you just had money in your pocket and you went and bought the Dow Jones Industrial Average when it put in this is a monthly W. That's a pretty good W, I'd say. How would you be feeling right now? Well, I think you'd be okay. That's a pretty good gain. So, where am I going with all this? That's a story about a stable currency. The problem is that as time goes by, remembering that, and let's see if we can do a poll. I always love doing this, and I'm always so shocked at how few people know this answer. Who is the President of the United States of America through this period? You level oneers, you just had this goddamn material rammed down your throat. I sure hope you remember this. Yeah, that's scary, eh? Ming Duck Vu points out that the Bundesbank is the first central bank to start to call uncle on this whole Eurozone concept. And the European Central Bank. I'm sure there's a few Germans that don't really like taking orders from a white-haired lady. But that's another conversation for another day. So this was thank you, Brian. The President of the United States was, no, wrong, random. Hoover, very good, Dave. Hey, leave it to a Brit. A Brit would know the answer. And I don't know where you are, Brian M., but I think David was the first one who answered. Anyway. Point being, Herbert Hoover was the president, and ironically enough, Hoover through this was like, if you got sucked into this nonsense and you borrowed money, true, man. Oh, Jesus, somebody get that guy a history book, or a girl. if you Hoover publicly even said this. He said, if you borrowed money to play the stock market through this and you lost money, I don't have any empathy for you. You were gambling. But it got so bad, so many people were underwater, and the worst part about this is the banksters used this period. They actually contracted the money supply, especially with the you could argue that the Republicans are more sort of like private enterprise, more sort of, they would be in favor of a private central bank, etc. Democrats, Roosevelt considered more, New Deal and, socialist and, left-leaning, blah, blah, blah. So the central bankers having Roosevelt do all these socialist plans, they're like, we're not going to play ball. So they just kept the money supply. Remember I talked about how the banksters used the reserves to contract and restrict money supply. And interestingly enough, they actually got to the point where FDR made it illegal for people to buy gold as a speculative asset. You had to buy the U.S. dollar. Which is interesting because that could be almost like Roosevelt sort of look, let's make peace, right? If we make it that people have to own U.S. dollars, then banksters, you can play your games, reserve currency, reserve lending, all that kind of stuff. And my hunch is that the banksters basically took control of the U.S. economy here. Once they were in control, interesting, hey, let's go generate a war, right? And there's a lot of people that, make speculative reference that World War II was encouraged by a few people. I might argue that international socialism, the whole communist movement, it scared the shit out of a lot of capitalists. Scared the shit out of a lot of the one percenters. The King of England was scared shitless because his cousin got executed in Russia, all that kind of talk. So the point being that if you go look at like U.S. Debt to GDP, through this period, the U.S. built up just a massive amount of debt. And of course the banksters love that because then basically they take over the system. They buy the paper. I find it fascinating, right now, like the U.S. Federal Reserve Board, whoever the fuck that is, they've got this balance sheet of like, what is it, like $6 trillion use of U.S. government bonds? I mean, so what does that mean? That means, technically at like 100x lending rate, they could expand the economy to $60 trillion. Is that what that means? And we heard recently, especially through the crisis, they even said, nope, no reserve lending requirement at all. So you can almost see the next almost speculative inflationary bubble in the making. The banks have all the firepower they need. And of course, it's all backed by government guarantee you pay your taxes. And I was thinking the other day, the banksters really have it sweet in the United States. Technically, if you're a U.S. citizen, even if you go overseas, you still have to pay taxes. I find that hilarious. So, if you were born a U.S. citizen, and I find it interesting how very difficult it is to give up U.S. citizenship. There's even a politician here in Canada, I find it fascinating. He was running for Prime Minister of Canada, and he was a U.S. citizen. He was a dual U.S. citizen. It's like, you got to be kidding me. What? Anyway, crazy world we live in. And it wouldn't surprise me if the Canadian tax people go exactly the same route. But basically, the banksters have taken over. The interesting thing is it's not a straight line fight. I thought it was interesting that through this period, right, big growth phase, demographics, all that kind of stuff. They call this period the Nifty 50, the greatest generation, all that kind of talk. Days of Camelot, right at the top. So fluff, Kennedy, all that kind of thing. But it's interesting because technically you could argue that we had a big, nice run up and then a pull back. This is a very natural economic cycle. But there was a politician that came to power right here that said, whoa, I'm not going to let this happen to me. And in essence, he took the Americans off of the gold standard, in essence, guaranteeing sort of a floor for the base of the currency. Of course, through this period, stocks should have gone down, but they didn't. Why? Because the value of the US dollar itself was falling to offset that. So what ended up happening was you got a sideways market. And of course, that by the end of this period, gold started out at like $30 an ounce, and it was $700-800 an ounce at the end of this period. So in essence, the devaluation of the US dollar did happen. And a lot of people argue that basically Fort Knox was drained. And now there's just a whole bunch of IOUs from central bankers inside Fort Knox. The central bankers have the gold now. Anyway, that's another conversation for another day. Point is, we had a politician that came to Washington that said, hey, you know what? We don't necessarily have to keep balanced budgets. Because remember, in this world, governments kept balanced budgets. The US dollar was stable. It wasn't run by banksters. That's changed now. Money system run by banksters, but we have to go through this contractionary period. Banksters don't really want to see this kind of contraction again. They don't want their bonds unhonored, right? All that. So what do? All right, well, float the currency, diluted versus things like gold, right? And commodity prices in general just went crazy. Interesting thing is baby boomers sort of came online here in their life cycle, entered adulthood, joined the workforce, and a politician came along and said, and probably encouraged by the banksters slowly taking over more and more. Politician here said, you know what, United States government, it doesn't have to run a balanced budget. Who says balanced budget? We don't have to do that. If times are tough, let's just go into more debt. And of course the banksters go, fucking A. You go into more debt, U.S. government, you have your tax base to guarantee the interest payments on that. Go into more debt all you want. We will buy the debt, and of course we can lend out against that, and away we go. In essence, that gave the green light for the economy to expand dramatically. So we get to the end of that generational cycle, same sort of thing as here, same sort of thing as here. The people in power knew what was about to happen. I think that's really important for everybody to understand. There had to be, they knew that there was going to be a 10-15 year period where, the shit could really hit the fan. That's this. So, interestingly enough, through we actually generated a nice war through here to really distract people. You might argue that also too through this period we leaned very heavily on untapped asset pools, i.e. China. And I believe, and of course this gets into heavy politics and stuff, but I want to look at this from a macro money flow perspective. A lot of sort of, let's turn our cheek, and frankly speaking, from a guy who ethics is really important to me, a lot, and I'm not saying it's right or wrong. I just like to say that if I tell you something, I want you to believe what I say, Problem is, we live in a world, if a politician's talking, what's happening, right? They're lying to you. So this is the brutal world we live in, people. So let's just, accept a spade a spade. I believe that a lot of sort of problems that people have a hard time with, let's say, we sort of turned a blind eye. And this is a bad part about capitalism, because capitalism isn't moral at all. Capitalism has no ethics. So I believe that sacrifices were made through this period to keep the game going. And that, in my opinion, that's going to be a sad commentary on human history going forward. But that's about all you can say. Problem is that to a certain degree, that was a bit of a fugazi. And the problem is literally, you notice that there is, where is it? August, actually July, August, that was the Chinese Olympics. And I remember I was a broker, of course, through all this, and we played the commodity markets being bid up. And this was the entire story. The whole justification for the rally was, China building out their economy, demand for commodities, et cetera, et cetera. then that Chinese Olympics event happened, and then all hell broke loose on the other side of that. I might argue that, people probably started to price in the fact that, hey, this big macro driving event, kind of like what you just saw on the Bitcoin halvening, right? This big macro event has happened. Why should we buy now? What's the inertia pushing the market now? And there wasn't. So, the whole market was built up on this sort of never-ending demand coming out of this emerging market. Once that sort of big event happened, and, through the 97, 98 handover of Hong Kong back to Chinese, exact same thing happened. Big build up into that event. Then literally within a week or two, basically the whole market collapsed. And it led to what was called the Asian contagion. So there's no shock. And the problem here is that a lot of things like leverage lending and stuff like that was built up on this premise that, hey, the Asian economies are just going to continue growing endlessly. So that, and then of course, the issue, the real sort of macro driver here, and are you guys enjoying this, or am I wasting my time? Should I just stop here? I mean, are you guys enjoying this conversation? Is this a waste of a daily brief time? So I'm just sort of ranting here. Brian says he likes it. Keep going. This is amazing. Okay, good. All right. I mean, be honest with me here. I don't want people to be like, oh man, this was a total waste of time. All right. Cool. Okay, cool. I'll keep going. So the problem is, and what was really bad about this, and this is what really pisses me off about Western capitalism, right? Is, they got a good thing. They know a good thing's going. Let's keep going, right? And I used to have this one fucking client, Willie. I named the damn indicator off of him, right? He used to drive me nuts. He used to always say, and actually he was like long stock all the way here, and he kept buying and buying and buying, and it's like, fuck, you know this is going to end bad. And he used to always say, Brian Hunt, you can never have too much of a good thing. And I hate that talk. He used to drive me crazy. So, one might argue that the sort of internal driver that was driving the sort of post-baby boom expansion, basically, it stopped, right? It ended. It was over. And the problem here is that the United States of America, because they didn't have the money, the only way that they could pay the Chinese to go down this sort of outsourcing, reducing cost. Keep in mind, there are no companies right now, everybody should understand that there are no companies right now complaining about their increased profit margins because they moved their manufacturing overseas, and especially to places like China. There are no companies complaining about that. And that's the brutal part of capitalism. Is, like I said, a lot of ills were sort of overlooked, but capitalism doesn't give a fuck about ills, right? And, Brian, I could get all heated here, but I won't. So the issue here is, if the United States of America doesn't have any money to pay these people, what are they paying them in? And they were paying them in U.S. Treasury bonds, which, of course, is extremely dangerous because Treasury bonds are not cash. They're nice pieces of paper, and yes, they have a government guarantee on them, but you can't buy a loaf of bread with a Treasury bond. You can only buy a loaf of bread with cash. So the Chinese had so many U.S. Treasury bonds, they were kind of like, you mean this housing market is a bit of a fugazi? That, they pulled all these baskets of mortgages together with some really good quality bonds, but then a whole shitload of, second and third mortgage garbage bonds. And they called them, they gave them a special name to try and sort of, what's the word? gloss over the bad bonds. And the Chinese were like, you kidding me? All of these bonds that you've been paying me in good faith that I thought were basically as good as cash, it turns out a lot of these things are worthless. And, put yourself in the Chinese position. If you woke up one day and you tried to cash a check that your boss paid you your 2 week salary in, and the check bounces, how are you going to feel? Obviously not very happy, right? I mean, it's just common sense. And I think that, and frankly speaking, I don't think there's anything wrong with it. I think the Chinese basically said, Uncle Sam, we have a problem. And in essence, in my opinion, that was QE. It was basically these international powers. And keep in mind, why is Japan able to just keep chugging along year after year and doesn't give a flying fuck about the rest of the world? Why? Horrible demographics, no growth, right? Everybody's dying in their homes, but so what? The reason is because Japanese people themselves own the debt. It's not like the Japanese people are going to call their bonds and say, hey, we demand our money back. Well, you're investing in your own country. They go very specifically. It's beyond culture and workforce, though, Random. It is a simple fact that foreigners do not own Japanese government bonds. Japanese own the bonds. The problem with the United States of America, and like, why did Argentina go the way it did? Well, because U.S. corporations and etc. owned the Argentinian debt. And so when the Argentinian government's like, oh, well, there's nothing we can do. We got to dilute the currency to make sure Social Security payments and stuff are made. Then the Americans are like, sell, 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 drive the bonds into the ground, which leads to hyperinflation. And now Argentina lives in the world that it is. And basically has for the past, 20, 30 years. Thank you very much, Citicorp. We love you. Mwah! You know, again, banksters always win, right? Where were we in our story? Oh, yeah. So I believe that QE, which basically started here, was nothing more than the Americans simply acquiescing, and that, in essence, when I say the Americans, I mean like the American money center banks, and saying, fine, we'll take these bad bonds off your hands. Don't flood the market. Just we'll quietly do it. We'll create TARP, right? Toxic Asset Repurchase Program. U.S. Treasury goes and floats like a $2 trillion bailout package guaranteed by taxpayers, right? Blah, blah, blah. So that means the central bankers can, if it's $2 trillion and it's a 10-time system, that means they can go out and basically create $20 trillion out of nothing. And so that is their balance sheet. Does that make sense, guys? You see how that works? And so we go, the balance sheet is $6.7 trillion now? So how the hell do they do that? What do you think? Does that make sense? Did I try and answer that? I don't know. Sure hope I did. The point here now is that was sort of TARP, and okay, well, let's leave QE at that. But it just keeps going, and it keeps going, and it keeps going. And the problem here is that I think they've done it again. I mean, the sad part about it from a logarithmic curve is maybe it would be pretty healthy. All of you guys sitting here at TRI, you should look at this chart and say, well, what's just a natural, healthy level for this thing to be trading at? Oh, gee whiz, look at that, 50%. That's almost funny when you see that. So, and this is what pisses guys like Julian off to no end, right? Was this really a crisis? Or was this nothing more than them just bringing the market back down to where you actually should be long the market? Oh, poor old Julian. He's going to have a conniption fit if he ever sees this. The problem that I have here is that I don't think that this is done, remember, guys, recessions usually happen in years that end in 8s, 9s, 0s, 1s, and 2s. So we are in that type of environment. The economic data now coming out now, no doubt about it whatsoever, it is going to be saying we are in recession. Is it a, was this, it just is, right? I mean, there's not really much you can say or do about it. But what I really want you, remember, this is the Fugazi, right? So this is them finessing the numbers. This is making sure that the market just always goes up. And as I had said earlier, I mean, because of this, I think everybody, ironically enough, just like Bitcoin has a built-in halvening, I think it'd be a good idea just everybody to put yourself on a dollar cost averaging plan. And because of this nonsense going on with the money system, believe it or not, I know these numbers sound absolutely insane today. And I remember in 1980, I remember here, and we would look down the road and we would be, and I remember when I first got into the brokerage business in where was it? It was, my first job was in 88, way back, right in here. And actually, I remember because that was the year after the stock market crash. And so a lot of people were still sort of recovering from that. But I got sort of my full-time vocation. I remember when the market, it was right in here. I remember when the market broke out of this high. And, that was about, it was about 2,000-3,000 on the Dow. I remember sitting in a broker office and we were watching the ticker go up, and you saw all the bank stocks rallying and stuff. I mean, you could see the bull coming. It was coming 100 miles an hour. And it was a good time to start in the business and understanding that this was coming ahead of us. It's quite remarkable. So where am I? We're not in this kind of environment right now. Just get used to it. We are still in this, what does this look like? We're in that transition phase. The interesting thing, if we go back and look at these kind of demographics, keep in mind the banksters won through here. They contracted the money supply, and in essence, FDR going on the gold standard, that to in itself, the banksters love that, reserve requirement, all that kind of stuff for lending. I believe that we're actually in this kind of phase here. I don't believe we're in this kind of phase because keep in mind, guys like Reagan came out and said, hey, government's here's a whole new resource. We can actually deficit spend. Well, imagine that. So which kind of exacerbated the baby boomer generation. And then, of course, we also had the end of the Cold War, which I don't really foresee us going. If anything, we're just starting a Cold War right now, which I suppose would be sort of the same thing here, right? Where's the Berlin crisis? When's the Berlin Wall crisis? That was 49, was it? So interestingly enough, we might see kind of like the building of the Berlin Wall, the Berlin airlift crisis, the Korean War was 1951, 52. Gee whiz, do we get maybe another Korean War here? Could be. Interesting how the stock market itself didn't give a shit, right? Yeah, back and forth, ebb and flow. And this is ironically enough what I think is going to happen. 89, no. Berlin, that's when the Berlin Wall fell. You young kids. I'm talking about when did it go up? No, maybe, I think the wall might have gone up in 61, but when was the Berlin airlift? All right, we're going to stop the whole damn show. Berlin airlift. What year was that? And of course, I totally spelled Berlin wrong. Sorry. 1949. So can you guys see we might have a Hong Kong airlift? Can you see that happening? I could see exactly the same thing. You know what we always say? If you don't learn from history, you're doomed to repeat it. I could literally see the exact same thing happening here. I might even tweet this out because that's actually shocking how similar this played out. And this was the expansion of communism west. I mean, I don't know what they're going to label. I guess CCP, right? They're still calling the Chinese communist. So maybe we see Hong Kong play out this way. It could be. If anything, what I would suggest to all of you guys, this chart, if anything, keep an open mind. You never know what the fuck's going to happen in this world. And also, too, this is probably a really good analogy, right? Don't get into the job of, especially right here. If you had said right on this pivot, all commodities, U.S. dollar, reigns supreme. You're getting chopped up here. Try and look at this image, right? Especially like through the end of the days of Camelot. Well, look at this market. It just ground, and then it started breaking right back up, and then started breaking. And then look at the actually, yeah. Well, I guess this one's not bad. So we were like trading range, and then we had to come back down here, and I mean, gee whiz, that's like a few years later. So, maybe that's exactly what kind of similar. I tell you, man, I'm seeing a lot of similarities between the greatest generation and millennials. You millennials are going to be called the greatest generation of the new generation. But anyway, so that would imply something along these lines. Interesting how this pullback here maybe corresponds with pullbacks there. But what I want you guys thinking about here, this is a diluted basis asset, i.e. a rise-only market. Now, and this is, when I saw this, I was absolutely shocked by this. And it really, in my opinion, you can't really understand these greed fear cycles if you look at this asset from this perspective, especially seeing this last fear cycle. It doesn't make sense. This is supposed to be down if this is fear. So what's going on here, Brian? And this is where, keep in mind, this brand new thing in 2008 was brought out. Hey, let's just simply go and print more US dollars. Keep in mind the supply of US dollars in here, very stable. Supply of US dollars in here, stable, but we're going to float it relative to commodity prices. Now they're saying, fuck it, let's just go and print the shit out of US dollars, i.e. Fed balance sheet goes ballistic. So what does that actually look like? It looks like an Ethereum chart. No. So if we actually look at this last cycle in US dollar, how do I say this? Understanding that this thing called M2, and there's a number of different ways to measure the amount of money that's in the economy at any given point in time. There's M1, M2, M3, M4. We're just going to simply, for the purpose of this, I don't want to go into too much of an economics lesson here. We're just going to simply say that the generally accepted floating supply of money in the economy is M2. So and this right here is the Dow Jones Industrial Average without that divisor. Assuming M2 stays constant. And keep in mind, M2 pretty much always was constant. And, I'm not going to get into specifics here. The purpose of this conversation is to simply show you that M2 money supply, if we take a chart like this and we ask when did M2 money supply actually start expanding, of course this is quantitative easing, right? QE and all that kind of conversation. So if we assume that M2 money supply started to expand dramatically through QE programs, then what does this actually look like if we take in that M2 money supply dilution into account? And the answer is, it actually looks like this, where this was before M2 was diluted. It was constant. Then this was basically, where are we here? This was, in essence, the deflating of the dot-com boom, right? And I don't have the dates on here perfectly, but this was the initiation of the war on terror. And you can see that the economy did come back. So, going back to our chart, that was through here. So, the public, Fakezi, they saw the stock market actually rally to new highs. But even as the market was rallying to new highs, clearly the Fed was expanding their balance sheet, i.e. increasing M2 money supply. Because if we look at it in real terms, we actually see that if we divide it by money supply, we were nowhere near those old 2000 highs. So even through the George Bush presidency, this was a lie. The market up here at new highs, the market was not at new highs. This is market at new highs, assuming that constant dollar value of the currency, but in reality, the amount of US dollars printed actually implies that the value of the stock index was substantially lower than the previous peak. Then the 2008 financial crisis, and that's interesting, right? So equity prices and everything all came down. It's interesting if we go back and look at that crisis, we just barely broke through those, war on terror lows. But in reality, you can see that actually the economy did much, much, much worse. And actually all the way right back down to pretty much the base. This is like, think of George Bush Sr. when he was president of the United States. So in essence, that, while the public was being spoon-fed, we're basically just going sideways, in reality, actually, we had taken back pretty much the entire bull market. And the quantitative easing rally, of course, continually adds more and more US dollars to the system. So when we divide that Dow Jones Industrial Average by a constant dollar term, it looks like the stock market's going to new highs. But in reality, we didn't even get back to George Bush's rally peak, and then we broke. What a coincidence, eh? And then interesting too, right? Remember we had said that if we look at it from constant dollar terms, all they did was bring the stock market back to the last double bottom. If we look at it in real dollar terms, notice that correction is just coming back down into actually pretty damn powerful support in here. So the way I actually look at this is we are now setting the base for, and I kind of, I had thought about this years gone by. I believe that we're setting the base for this type of economic expansion over the next 10, 15 years. In the face of, we are going to have rising global tensions, and ironically enough, actually that's perfect because that feeds right into the U.S. industrial military complex. Probably going to have a building out of Big Brother technology. Ironically enough, cryptocurrencies are right down that alley. All of the efforts within cryptocurrency space may actually come back to haunt us. I've said this before. I honestly believe by the end of this entire build out of this cryptocurrency internet world, every single one of us is going to have an immutable record on the blockchain of everything that we do in our lives. And if you don't, then you will not be able to participate in things like Social Security, old age pensions, healthcare benefits. And you just will not be able to participate in that. And you can see it coming. I mean, it's totally writing on the wall. My suggestion to you is to try and find those companies that are going to address those niches. And I believe that through this economic expansion, the next generation of billionaires will be planted. The question ultimately is, are you going to take advantage of this? You could be like Joe Granville if you wanted to and say, nope, that's the end of capitalism, it's all over, just walk away. And I think, Joe Granville, he died, I think, in mid-2000s. I think he was still a relatively wealthy man. I don't think he was poor. But he was clearly wrong. And if anything, this is an excellent testament, and this is what I teach in the Level 1 program. Everybody remember it, right? Don't go and fucking bet the farm on one bet, because you might be wrong and end up, absolutely disgraced. The public loves to do that. Beware of that, okay? But interestingly enough, kind of notice this climbing the wall of worry. I believe over the next 10, 15 years, we are going to live in a wall of worry. Worry about the Chinese. Worry about viruses. Worry about cyber hacking. Worry about this. Worry about that. But ironically enough, the market's just going to grind higher and just drive you crazy. That's actually what I think's going to happen here. Now, the problem with this market state right at the moment, and, guys, try and remember this. When was the last time we saw weekly W's? Well, there's a big fat one there, and how ironic. All they did was just bring the market right back down to that level. How cliche, eh? Do we have any weekly W's here yet? Not really. And, you guys have seen me do this on things like Bitcoin charts and stuff. There's nothing really new here. Who can tell me? You should be able to also look at this and go, oh, I see that pattern. Who can tell me? What is, snap of the fingers, that pattern Brian's talking about? You don't see it? Crickets? Come on! There's a pattern staring us right in the face there, Josh. You don't see it, eh? Oh, well. I'm just being facetious. I believe Colonel Mustard did it in the drawing room with the candlestick. I believe we got something like that going on right now. So, who can fill out the rest of this? How does this go? Twinkle, twinkle. Maybe megaphone. But ironically enough, actually the megaphone says 3 tags. And this will drive Julian crazy. If you're going to play the megaphone, ironically enough, it says the 3rd tag, boink, boink, boink. That's a buy down in there. Don't tell Julian that. It'll drive him nuts. But what I think's going on here, and hopefully you can see this. Where am I going with this, guys? What usually happens here? Something like that. Hey, there you go, Rob. Nicely done. I mean, I'm just eyeballing this, right? It's certainly not scientific. So, to me, this feels like we're in that kind of environment. And also, too, like I put a tweet out recently. Justin Bieber. What? Justin Bieber. We don't talk about Justin Bieber anymore. Remember when he was all the rage? Jeez, everybody talking about Justin Bieber. Sadly through this, I don't think it's in our best interest, especially trying to time these massive, ridiculous... I mean, keep in mind, this is an event that happens once every 500 years or something crazy like that. I mean, could we have maybe 3 or 4 years of absolute insanity through a 500-year celestial shift kind of thing? In fact, where's that Krispy Kreme person? I heard... oh, there you are. Welcome. Krispy Kreme here. I saw a study earlier today that said that there were like 6 different unique celestial events all happening in the year 2020, and this was absolutely unprecedented. You have to go back like millions of years to actually see a year where 6 of these different events all happen in the same year. So when I hear that kind of talk, to me that just simply says, should we be taking any really big bets? Do we have any like clear trends through this? Is this, to me, this feels like we are going, everybody knows that first person who just rents their skis and just goes skiing for the first time. And they're stepping up to a black diamond hill and they're going, all right, yeah, I'm going to be able to navigate this. How does that usually go? Anyone? Do we have any skiers? Yeah. A tree. So, I don't know whether it's really in our best interest to fight this. I know there's some people on the site that are absolutely confounded by the volatility, but I hate to... Annie! Is that Annie? Is that you motherfucker? Is that my same innie from years ago, or is that a different innie? He's going, yeah, I'm innie. What did I do? What did I do? If that's my, geez, where were you from again? The Pyrenees? Is that where you, anyway, if that's my Pyrenean innie, where the fuck have you been, you son of a bitch? I feel like a jilted girl on a fucking prom night. Well, it's awfully nice to see you. You and your buddy making fun of me in fucking Amsterdam. Say hi to him too. Basque, that's it. Basque. Damn. Anyway, good to see you, Slick. Thought you died. Jesus. You crazy revolutionaries. Anyway. Yeah, totally. Zach. Totally. Anyway. Nice to see you, Slick. I don't know where the hell you've been. Alright, anyway. If anything, that's probably a good sign for crypto that Mr. Moneybags has come back. Game on! Anyway, alright, so let's keep moving on here. What was I talking about earlier? I don't know. Are you guys having fun today? This is kind of an odd daily brief, eh? We didn't get too many people signing in today, I can see that. Anyway, I'm having fun, sort of blabbing. What the hell was I talking about? I saw Annie and I fucking lost all train of thought here. Oh yeah, that's what I wanted to talk about. So you can also see that same math. Can you guys see the math in the NASDAQ? Do you see that the NASDAQ actually really isn't at new highs? These tech stocks are not actually at new highs. It's a fugazi. Yeah, we'll talk crypto tomorrow. And I'm trying to give you guys some strategic thinking here and try to help a bit. So, this is the NASDAQ, and there's that M2. You can all do this too, by the way, right? Divided by M2. The bottom line here is, hopefully everybody can see, just like I talked about on that Dow chart, can you see the inverted head and shoulders? I don't know whether, can you see this? I think this is our crazy celestial events wreaking havoc, and try not to get too sucked up into this nonsense. You can also see that, can you see the diamond here? See how we're making higher highs and making lower lows at the same time? I don't think you want to be a superhero to try and time this. If anything, what I would say is there's probably going to be a diamond that's probably almost about equal size on the other side of this. And then we should come out the other side and get ready to grow. So, I do understand that there are some people on the site that are going through a lot of anxiety right now, trying to pick tops and bottoms and trying to outsmart this. And frankly speaking, I don't think that's in any of our best interests. I mean, trade your setups. If you have good location, you have indicator divergence. I love the use of RSI studies. I think they're awesome. We have people on the site that demonstrate and use them well. And you have realistic profit objectives. Basically those are setups, right? Setups are setups are setups. And I got to tell you, man, in the junior market, we've had some absolute treats. I got this crazy, my eyes warrant. We got setups popping up all over the place. This Funko, what a beautiful little double bottom there. I mean, I don't trade the market to try and predict what's going to happen. What I simply do is I say, holy shit, this thing's fallen a long way. And you can see I was kind of interested in here, but gee whiz, it just keeps going lower. And then all of a sudden, I start to see all this kind of stuff that's my setups, right? I like W's. One of my setup criteria is if Kavarkinator's buying it, I have no choice but to buy it. That's just a joke. Anyway, I don't know what's going to happen here, folks. I really don't. All I know is that more than I'd say a good 2/3 of the time, when I see all this kind of WE action, and I see a range. I mean, gee whiz, this is just going back to January. A good, I'm going to say 60. I'll say maybe even 70% up in that area. A good 60, 70% of the time, I will get a rally back up into things like 50% rules. And I don't have an opinion here. I don't know what the fuck the market's going to do. Does anybody really know? I mean, clearly over the past 6 months, nobody saw that coming. But I'm just trading setups, and I'll be full disclosure. I mean, it was fun chatting about this morning, but if this son of a bitch goes back down and breaks below this W, I'll walk away and say, there's a great way to lose money. I mean, you all know the approach that I have, and put the emotion away. Just trade your setups. Who cares? If it works, it works. If it doesn't, it doesn't. And don't take personal net worth, self-worth out of this. I mean, I see Big Rooster there typing in the lounge, so it brought to my attention this is one of his ideas recently. Trade your setups. I mean, hopefully everybody sees the W. Down, up, down, breakout. What's beautiful about this is it had a great Wyckovian check there. And I mean, Big Rooster, I mean, the girls like him for a reason, right? His name's Big Rooster for a reason. Yeah, and he's definitely the cock of the block now on TRI. That's terrible. Sorry, ladies. And I love working with these guys. I love it. It makes me so happy to see that you people have trust in me. You see this. You understand how it works. This is our simple L Tangonator setup. You should look at a chart like this and go, yeah, well, 50% jump. That's not out of the question. We just had one while we were on while you Americans were on vacation. We were open here in Canada yesterday, so I don't know whether any of you got to see that, but I don't even know where the hell it is. But I just had one happen yesterday. Again, no opinion. I don't know what the fuck's gonna happen, but if you have a setup that produces desirable results more than 2/3 of the time, then your job as a trader is to put your opinion away and just trade the damn setup. So here's one. I'll just use this high here. I think this thing's going a hell of a lot higher. But even if I just use this M top, I could see a rally back to 830. That's not totally unrealistic, and everybody can see the W's. Again, this is another big dick trade. Well, that's a little too brutal. Sorry. Big phallical instrument trade. And, what the hell, man? So, if anything, what I'm telling people, and this will be my message for, tonight's meeting, is as long as I keep seeing stuff like this, here's a good example. This is the Dow theory. Again, you level oneers, you're just sort of getting introduced to this. As long as I keep seeing the transports confirm moves higher here on the and this happens to be the Dow, then technically we're still okay. You notice here when the Dow made new highs, the transports did not. That was a major warning sign that, hey, trouble was coming. So transport's still pointing up. Stocks, of course, have broken out of this trading range. As I had sort of suggested to Sjord yesterday, sometimes, if you decided you were going to short this M, sometimes it's best just to simply say, I was wrong, get me out, back on the sidelines, wait for the next bus. So, and then also too, and this is what still leads me to believe I'm still feeling somewhat bullish, is if I actually look at the Dow, which is the big stocks, relative to the small stocks, the Russell 2000. Where's the money flowing right now? So this is a relationship of large cap versus small cap. And if this thing's Wing, then it means that people are willing to take a little bit more risk in the market. Again, this is another concept for your level oneers. Try, use inter-market analysis relationships to try and help you see the forest through the trees. And you can see recently we had a little M, kind of like what we saw in the S&Ps. Had you shorted that, basically the market's telling you, nope, that thesis is wrong. And again, don't take any personal self-worth out of that. It's just, so what? Market's telling you that you thought that the market was heading down, and it's a reasonable shot. M's work 60-70% of the time, but you're not correct. Okay. All right, what time is it? I've been chatting for about an hour and 15 minutes here, so looks like I ran my welcome with Josh. Yeah, well, so when a new person to the site here is just sort of saying that, and guys, I hate to say it, but that's where most people fail, right? Especially if you buy a stock and you inherited $5,000 from Uncle Louie or whatever, and you just go plunking in an idea, you become emotionally attached, and you can't disassociate, and you can't just look at an idea and say, well, the market has proved that my idea is not correct, and be humble. It's a very, very hard lesson for a lot of traders to learn. It does mean, you know what it does mean? It means that you have to accept that wrongness right now. And that's painful. That's a reality. Once you close the position, when I was a broker, a lot of clients would say, I don't want to sell because then the dream is over. Once you actually pull the trigger and exit that buy or short or whatever it is, the dream is officially over. And that's very hard for a lot of people to accept, and quite often, kind of like our Nortel conversation there earlier, quite often investors have no choice but to accept it when the asset goes into bankruptcy and goes off the board, and then they just have no choice. And then it's a damn broker who got me to buy the stock 3 years ago. It's his fault, Yeah, that's it's a potion for disaster. Somebody says, I'll just move my stop a little bit more, just so because they don't want to mentally face the reality you were wrong, and that's tough. That's very, very hard. And my suggestion for you to go through this and understand, sometimes you just have to act to. Ironically enough, acting in your best interest is a sign of a professional. Putting your emotion and your sort of feelings aside in the short term and just simply, now I have to act in my best interest. What is in my best interest? And ironically enough, holding on to that losing trade is not really in your best interest, but very, very painful. So, those people that are trading and those people that were picking tops, clearly the market has just said, no, you are incorrect. And that's just the way it is. Next bus in 10 minutes. Don't take too much risk. Let's see. We've been chatting now for about an hour and a half. I hope you guys enjoyed that longer term sort of. I really wanted to do a little bit of an episode with the brand new students to the site about those long-term cycles. I hope that was also a little bit more benefit, a little bit more help for you to understand, sort of given current market context. I did really want to talk about this idea of M2 money supply and how, looking at this chart, this actually, interestingly enough, these are three very different assets, ironically enough. They all have exactly the same ticker, and people look at this and think it's the same, but they're actually extremely different assets from cycle to cycle to cycle. So I hope you guys got some benefit out of that. We are going to have the TRI SOF meeting tonight. Me personally, I'm not really too enthusiastic about buying too many new ideas right now. I would prefer to see a lot of the buys that we've done recently actually start to produce. Keep an eye on names like this. Can we get another, AB equals CD leg higher? let some more go, that kind of thing. Does this eyes trade that we picked up here, does it do something? I got lots on the book, so I doubt, again, Kevin, fucking A, what a stock picker. I don't know whether Kevin got any of this, but he was touting it to us, and wow. So this is the kind of environment where if you did step in off the bottom, you should be getting paid now. Let's see. Anything else to sort of review here before I let you good people go? I haven't really talked too much about crypto here today. I don't see a heck of a lot to get to. Oh my Jesus H Christ! Guys, I'm sorry. I just made some more money. I don't know if any of you guys got into this blockchain corp. It's taken up, baby! Look at that run. Woohoo! So all I got to do is I just got to talk long enough, and eventually one of these goddamn things will take off, eh? So that's good. And what's kind of funny is even Sjord mentioned this a week or two. Sjord, I really hope you went and bought some of this, because he even mentioned this. And I said when I saw him mention it, I was like, that's an odd stock for Sjord to be talking about. So this is, you level oneers. Actually, you're doing fundamental analysis right now. Do we have any people left in the call, or have I talked you all out of here? Landon, cool name, Landon. Oh, excuse me, that was terrible. I really didn't mean to do that coughing in the microphone there. Yeah, my Krispy Kreme guy. Okay. So this, I hope we have some more level oneers here. This is a VCIM name. So if anything, all you level oneers, because you are basically doing this right now, I want you to go and tell me the VCIM story. And hint, 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 you can see there's the first criteria of VCIM. Stock was rolled back on a 20-to-1 basis. Holy crap, 20-to-1. So, really, really good example of VCIM. And actually, as soon as I'm done this call, actually, you know what? This stock might actually pay for my root canal today. So that's kind of a bonus. That's karma for you, eh? Okay. Let's see. What do I want to do here next? Isn't that interesting? I wonder what these guys are up to. Somebody wants me to look at a cryptocurrency. Anyway, what I wanted to say originally, and that's just a nice treat. What a special treat that is. What I wanted to say was I didn't really see too much bullishness out of crypto stocks. So I'm not really looking for a hell of a lot of bullishness out of crypto itself. I do find it interesting that this little stock is running here. That's kind of just a fun treat. Hopefully my sell half on a double order just got filled. Have to look at that later on. So you can see, this is this big banking stock. He's looking a little heavy. Galaxy, that's Novogratz. You can see he's looking a little heavy. HUD, kind of going sideways here. Riot, looking a little heavy. Marathon's got a little double top now working. So, on balance, am I looking for a lot more up out of crypto right now? Not really. I would imagine, though, if you, especially your individual altcoins, if you happen to see stuff that's rocking and rolling, you might see some fun. List that I was watching through the weekend, don't see really a hell of a lot of follow through. This BTS seems to be working its way higher, so keep an eye on that. Might be a nice little breakout up top. I did see that this little theta still seems to be pretty popular. Obviously, we can't chase it, but maybe hunt some consolidation action in there. But, like most of these, you don't really see a hell of a lot going on. ADA, that's interesting. Nice railroad tracks. Looks like it's in a reload zone, so maybe take a look at him. Is this your NEO? Is somebody asking about NEO there? Somebody was barking. Hey, look at this, look at this, look at this. God damn it. What was it? EOS. All right. Well, I do see this NEO. It looks to me like he's botting out here. So maybe take a look at that, all you slick intraday traders. Something's brewing there. BAT, you can see a bot's forming there. Look at the double bottom coming in there. So keep an eye on him. As for Bitcoin itself, I don't really see any change to this story. I still think we're sort of like right in here. I wouldn't be surprised if there's some back and forth over sort of like the next week or so here. And then if we do get a nice slow rolling, or, like this rally peak right here, that probably corresponds with a mountain man tag. And then I think we were looking off the lower time frame charts. This level looks really interesting for a revisit. Some hunches over the next week or so. We're probably going to work our way up through here. But could we just puke out and work our way down to this megaphone low? Totally possible. If that does happen, just like I showed you on the Dow with that monthly diamond pattern, coming back and checking the original breakout level, the bottom of the megaphone, the bottom of profile here, my hunch is that's probably a pretty damn good buying level. So, if we just puked out, watch for the puke out. You might actually get some half decent little trades against this value low here, right? Which would be sort of a dip against these lows. But as I said, my hunch is they're going to bring it back in here, slow rollover, and then the completion like this. But there's not a hell of a lot for me to do on the corn right here. And then why don't we finish this off? Quick boo at, you can sort of see, look at the fight going on here off the lower time frames. Ugh, nothing really for me to get too excited about. Let's take a quick view at, what was that? Somebody asked a couple times. EOS versus BTC. Let's see what you got here. EOS BTC. EOS BTC. What exchange? Binance, Bitfinex, Coinbase, Trex, Poloniex, Huobi, HIT, BTC, KuCoin, OKEX, Bitfinex, or Bitfinex. Shrug. Trex. All right, where's Trex? Trex right there. Versus Bitcoin? Bitcoin. That's not bad. Yeah, you're heading in the right direction. I like how you're thinking here. Problem is, doesn't this kind of look like a big sort of AB equals CD? I don't know how far down we have to go here. And I could understand, I wouldn't have a problem whatsoever with people like Nanny nibbling. They're sort of accumulating. All right, that's fine. There's nothing wrong with that. I don't like the fact that we've broken through this low here from like a trading perspective. That's not a good sign. What you probably are going to see here is there's going to be a rally back to this level, probably against this level, and those sort of higher time frame players that won't dump on the panic, they will dump on sort of a recheck. Think Wyckoff going the other direction. So, it's certainly not like super sexy. We're cheap, but what worries me here, especially if I go say something like log, is usually these things have to go like AB, something like that. You might do it against there. And the fact that we just so violently broken through there, and the problem with log charts is it's impossible to do this just by cloning it. You have to sort of eyeball it, which is such a pain in the butt. But looks like AB, something like that. Yeah, somewhere down in here. CD, so somewhere down in there. That's a tough one. If we just take a look at our indicators, let's see what we got here. What's the most recent one I have here? There we go, April 20. Right, so what you really want to see here, we kind of talk about trade location as your first reason to consider taking a trade. So, they brought her right down. Look how they just smashed her down here, right? So we're breaking all these lows here. So that's not good. Not getting any W action off of like what I would consider a half decent trade location. Jump up. And I hate when the divs do this, right? I mean, a beautiful div looks like that, right? I hate when they go like this, right? Ugh, horrible. Because really, think grade 3 English class. I suppose you could have hunted something through there, right? But again, didn't really get any W's to work with here, right? First W that kind of comes in, and it doesn't even really come in. Is like through there, right? New low, rally up, pull back, and look how it tried to get up there on no volume at all. Waffle, waffle, waffle. Tried to get up there. A little bit more volume, but just not much. And then puke out. M comes in here. Clearly this is saying this, whatever this bull push, it's done. Momentum's rolling over. And puke out central. Sucks. It's capitalism. So I don't think I ever really got any half decent bottom to work with through here. So now we're talking about we just made new lows, eh? Just made new lows. So as a result, that in itself, really for a trend, we'd like to see weekly W's. We're not getting any help there at all. One thing I do like, we have pushed to new lows, but MACD did not make a new low. So now our MACD indicator is starting to look crisp. But the problem here is that we have not broken out through this level. So you're going to actually need a more push up here to confirm this MACD. Then, when that happens, I would be drawing my fibs and hunting for, say, reload zones against that original low. Ideally, what would happen is market comes down, puts in a nice W, accepts that this is indeed the low, and maybe we get our buy signal way over here. So that if I had my druthers, that's what I'd want to see. So I don't know whether that helps you or not. What I would suggest is maybe look at this thing versus USD. I mean, I suppose, if we're... The problem is I don't really like trading against the higher time frame trend. Julian sort of told you that. So I suppose you could go, well, Brian, isn't this sort of like an inverted head and shoulders? Maybe. And, could you say things like, well, Brian, couldn't we expect a nice little rally, 50% rule up into here? Yeah. But the problem is, do we have the wind at our face or do we have the wind at our back? You can see all the moving averages. They're all negatively positioned right now. It just feels a little bit early to really, bet the farm. I could very easily see like lower time frame players. If we drilled down to like a 4-hour chart, there was probably a cute little setup to get long through this, and some probably half decent little lower time frame trades. But like I said there just a few minutes ago, I really like to have sort of like the higher time frames working in my favor, working in my direction, before I start going down and hunting longs off of this. But, for whatever it's worth, whoever was asked this question, I suppose if I was, held a gun to my head, did we do 33? Yes. Did we do 66? No. So the bot's alive. It's off of a... It's off of a V bottom, so I don't like that anyway. But could you say, well, Brian, I really want to get long this. I'm hunting a trade setup. Is there a trade somehow in here? Well, you can see it looks like 4-hour. Whoops. Looks like 4-hour. Yeah, there's something working there. So, could you have justified getting long from 25? You move stop to scratch, move your stop to trailing. You can see you'd have your stop working underneath these lows. Your target is this 2907. Maybe now move your stop to below that level, and you're just working the trade. So do you see the various different perspectives? I don't know if this person's even still here who asked the question. Probably talked them out. Anyway, that's about 10:30 here, so gave you a nice big strategic overview. of the market. We talked a little bit about Fakezi and money and the banking system. We talked a little stock, gave you a couple examples of some half decent stock ideas that are working. And we even got over to crypto, gave you a sort of an overview view of what I'm seeing out of Bitcoin, not really a hell of a lot. And we even take a look at a nice little altcoin trade setup and how somebody would trade this market at the moment. All the way from investors, don't touch it, it's a piece of shit, to dollar cost averagers, nanny nibbles, just keep buying against the bottom end of range, don't break that 5% rule, to your little slick days and swing traders. Trading the bots. All right, everybody, why don't we call it a day? Sure hope you enjoyed all that. We'll leave it at that. All the best. Hopefully Kevin will come back and we can get these shows a little bit better. Slicker, cleaner, faster, leaner. Nice to see you, Innie. All right, everybody. Have yourselves a great day. All the best and bye for now.